up? How's the girls' table?
Good. Happy to be here.
Guys, we were sitting around and just scheming, and we're like, we got to jump on the girls' table podcast. So, in a sweatshirt, Aiden looks good as always. He's back at it again. Aiden, today we're discussing all about saving versus spending. It's something that we were just diving into, and I actually just wrote a LinkedIn post on it because I think so many people our age love to spend money. They love to show off their vacations. They love to show off kind of all their new jewelry, designer clothes, whatever it is. But not enough people are talking about saving money. And so I think what we need to really discuss and what we need to talk to you guys about is the importance of saving money. So I guess starting off, Aiden, when you think about saving money, what is important to you?
For me, it's all about owning assets. I've always kind of been in favor of the analogy that like cash is kind of like an ice cube, and if you're not doing anything, it's just gonna like because of inflation, just melt away over time. And so I've always been a big fan of like buying in the things that you believe in with your money. For me, that was Tesla. It's also startups. But I think the best way to use your money to grow your wealth is buy an asset that you believe in, but also that you think are going to appreciate in value. I think one of the best inventions ever is the S&P 500, and that's what most people should invest in. But in terms of saving, like, what do you do? Like, how do you think about saving? Like, do you have a mechanical process for like your income every 2 weeks? Do you set aside a certain amount of money? Do you have a savings account, Roth IRA? Like, how do you think about it?
Wow. I mean, that's a loaded question. I have so many different things. So I think when I first came out of college, one of my best things to do was to budget. So kind of starting from backwards or starting from the back and then going forward. And what that was how much money do I want to have saved by the end of the year? Post taxes, post spending, like what is that amount that I want to put in and invest? And so that's kind of where I worked. And then I said, okay, if I want to have, let's just say $20,000 by the end of the year in my savings or investing, whatever the case may be, then what are all my other expenses? How much do I have to spend on vacations, to spend on shopping and whatever? Now, as I've gotten older, I don't have that same mindset because I think it's hard to go line by line tracking what you're doing. But I would say that I buy clothes on a need to buy basis. I need some new clothes. I love thrifting, but I think my main thing and how I see money is save, and spend when you need, especially when you're young. And there's so many books that actually talk about the importance of saving money when you're young. I'm just reading The Defining Decade. And there's a reason that when you look at retirement, it grows so much over time. And something that I actually recently dove into today is compounding interest. And so what I want to walk you through is like, let's just say you had $100,000. After the first year, you put that in. Right now, you put it in Treasury. Interest rates are 5.03%. That first year alone, think about like the bonus that you get at work. It would give you $5,000, a little over $5,000, but for our sake, $5,000. That next year, let's just say you save another $20,000 and then you put it back into interest rates. And you also had that additional $5,000 that you made for the first year. After 10 years, it'd be at right around like $380,000. And then it just keeps going up and keeps saving. And I just think most of the people our generation don't realize that like by the end of, I'm pretty sure it was like 4 years, you would have $5 million just by doing that same thing. You start with 100K, you put 20K in every single year, and then it grows. But something that you mentioned was the S&P 500. So I want to jump into that because why do you see that as a really important asset class for people to invest in?
Well, the S&P 500, if you look at it over time, it's always reaching new highs because it's one of the greatest inventions ever created. Because basically, what it does is it takes the 500 like best companies on the stock market, always interchanges them, weights it to the best companies that are performing at the best. And it's just like this mechanism for just like the market, the best companies in the U.S. stock market. And I just think that's incredible that anyone in the world can just own a part of the like the American economy.
Do you know how it did last year or what the number was? So
I'm not familiar with the number, but I think it went up almost like 50%. But yeah, you'll have to check in like a year.
Yeah, which is crazy. And I think especially for early investors, they have to look at it as like, you don't know better than some of the traders out there. You're new to investing. One of the best ways, and as you mentioned, is to really take the top 500 companies and invest in them. And I mean, it's had amazing returns over the last few years.
But I think what's interesting what you said about saving is there's this book called The Psychology of Money,
Mhm.
and one of the kind of stories that the author shares, the author's Morgan Housel, you can find him on Twitter, talks about how there's a janitor that gave like $5 million donation to the school that he was a janitor of for like 60 years that he worked there. And everyone's like, how did the janitor uh, give this much money? He was a millionaire. No one had any idea. He donated to the school. And the way that he did it was he saved. He just saved every year. He lived like a very simple lifestyle, and he
Mhm.
was able to retire. He maybe invested in the stock market, I think is part of the story, like the S&P 500. And he has like $6 million as a janitor. And I think, and nowadays, like you're saying, everyone's trying to keep up with the Joneses.
Mhm.
It's you got credit cards, easy to spend. Now there's a lot of things like Afterpay where you can only have to pay for something like 5% a month, and you pay over like 2 years. So it's just trying to like stimulate the economy and stuff like that, which is maybe good, but it's
Mhm.
not good for our spending habits.
Yeah, and I think a book that I actually was given, one of my first like true business books very early on, is Rich Dad Poor Dad. And it talks about the importance of having this annuity. So I came from a family where my dad always did real estate. And so once you end up paying off the actual homes and the apartments or the corporate real estate, whatever the case may be that you're investing in, he still gets the rent every single month from renting those out. And so I learned at a very early age the importance of continuously having this other source of income apart from just a job. Because I mean, look at the market today. There are, everybody listening probably knows at least one person that was fired in the last 6 to 12 months, if not sooner. And it is a hard market. And that's not to say that people aren't capable. It's just there's so many people out there looking for jobs. And I really look out to those people because it's hard, because the bills keep coming and you have to find a way to pay it. And that's why this other source of income is so like, you must find it, and you have to have something else other than a salary, because you can't just rely on that
Yeah, and
forever.
you've done a really good job at that. Of like, I mean, I think what now you have like several income streams.
Yeah.
But I think, yeah, like always being able to have multiple streams of income is like huge. So just like also always feeling like you kind of have that like safety net in addition to having savings and yeah, investing in assets.
Yeah.
So
And I think people look at it where they're like, okay, well, I'm sorry, but I can't go buy a house and go rent it out. I don't have the money. And hey,
yeah.
I'm with you. Either do I. But there's small things. I mean, as I just mentioned, if you do have $100,000 eventually in your savings, that gives you a loan $5,000 a year just by putting it into your account. And hopefully that continues to grow. But another way is stocks have dividends. And that's another way. We're investing in startups that we obviously hope would once again have those payouts. But there are other ways of finding things. And I mean, obviously, I am a huge believer in a side hustle. And I believe that, like, you do have time at night, you do have time on the weekends, even if your job is very demanding. And there are other ways to make income so you don't have to just rely on that single paycheck that most people actually rely on.
Yeah, no, 100%. And I think at the end of the day, you just have to do what like is right in like your circumstances. And nowadays, it's just also never been easier to start an online business. Um, Not that I've done it before, but I'm definitely like with all the tools available, like that's what gets me excited as like an investor in like future technology is like, Squarespace, Shopify, Stripe, Substack, YouTube. Like there's all these things that just make it easier than ever before to like just, yeah, the online economy is just a super exciting time.
And I know you asked me, but do you have a way of what you're thinking about? Because we do a couple different asset classes. I mean, there's crypto, there's stocks, there's private companies, there's funds. I mean, there's real estate if you're into that. Like the list goes on. There's IP, there's domain names. How do you think about, hey, I have this savings. This is how much I want to put into startups. This is how much I want to put in. Or if you were like just getting started, what would you recommend?
Yeah, I mean, I don't have a tried and true system myself.
Mhm.
Mine just kind of is like much more flowing, which is like when it's the right opportunity to invest in, I'll make the investment. And I just try to keep like a strong cash position, even though that's kind of goes against my ice cube analogy. I think during the bull run of 21, 22, I got a bit too excited with my like capital deployment. So now, like, okay, I want to keep like a solid cash position or treasuries and just like have that and not all in like potential like volatile stocks. But yeah, I think I personally actually don't even own the S&P 500, even though I was saying it's a good investment. I like to pick individual stocks. For me, I like to spend the time to do diligence, think about the future. Tesla's my biggest position. I want to own that for 10 years. Like, that's a company that I just never want to sell.
Apple and Amazon are mine.
Yeah, so exactly. You find
Mhm.
companies that you think are going to appreciate so much that you know are going to be juggernauts, and you put your faith into those companies.
Yeah.
And that's like what a lot of the Magnificent Seven, which is like Tesla, Nvidia, like Facebook, Amazon, Apple,
Mhm.
Microsoft. It's like those companies are like probably the best store of value in the world right now.
Mhm.
Like better than the Treasury. They aren't going away. Like the faith that you can have in them as investors is so strong, and it's just going to grow your wealth as those companies continue to execute and like change humanity. So,
You know, I thought like apart from those, there was also Alibaba. And I was somebody who also put in, when I was with Amazon, I was also with Alibaba, and one took off and one.
well, you know what? That's what you get for not investing in America.
Or the S&P 500.
Or you're the S&P 500. So yeah, that's why you invest in American fucking companies.
I think it's important too to decide on your asset class. And that's not to say I think you should diversify, but I agree that if you're just starting off in the stock market, as much as those 7 companies are great, the S&P 500 is amazing. If you want to invest in crypto, none of us could time the market, and the crypto is so volatile. So I actually just spoke to somebody today where he's like, yeah, every single Monday and every single Friday I have a certain amount of money and it buys that for me. And so like you can't time the market, and if you're just starting out, you don't know any better. So I would recommend that. Then if you want to get into startups, and we spoke about this before, but I mean, you have a few ways. If you have a little bit more of net worth than some people, and the minimum obviously is sometimes a lot for funds, 50K, 250K, a mil, depending on the fund size, you can invest in funds, or you could invest in different syndicates, which is how both of us started.
Yeah, that's how we got invested in startups, so just through forming SPVs. You know, you can put in as little as $1,000. You just have to be accredited. But yeah, it's a great way to get exposure to the startup asset class. And it's definitely where you're probably going to never make a return and lose a lot of money. But it's also a place where you could make a lot of money in 100x plus investment.
All right, let's get real. What's been your worst investment ever?
My worst investment?
Mm-hmm.
Well, I mean, we invested in a company that like completely failed very quickly.
All right, what about like a public stock? Because obviously you probably don't want to share the details publicly on the private company.
Yeah, public stock. Well, I just invested in Rivian right before their earnings last week because I thought it was going to be good, and that went down 30% in a few days.
I do want to add though, can I just tell your story? Even though it's your story, tell you could add in. So Aiden came home the other day. Guys, he's been on a cold streak in poker. And so really feel for him if anybody plays poker. It's very aggravating. Every single time he goes out, he's like, I'm winning tonight. And then comes home and hasn't been well. This has happened about 5 to 10 times. Maybe over exaggerating.
It's been
a lot.
It's been a long cold streak.
Okay, so anyway, comes in and he's been talking about Palantir a little bit, and he, whatever.
I had some Palantir stock already.
Oh, you did?
Yeah.
Okay, well, they were having their earnings, and he's like, you know what? I'm gonna invest in Palantir. You put what, $2,000 in Palantir?
When?
Right before their earnings.
Oh no, like $4,000.
Oh, so comes over poker. It's like, yeah, I lost my $100, $300. I'm gonna go put $4,000 in Palantir. It went up what, like 50%?
50% that day, the next day for earnings.
Yeah.
I think it's gone down now to like 35%, but still felt good nonetheless.
Oh, that covered all your losses that you've had recently.
Well, then I just lost some in Rivian a few weeks later. So the stock market's hard.
That's why you invest in the S&P though.
Yeah, exactly. It's hard to pick stocks, but also like what you should do, like I didn't sell Palantir, I didn't sell Rivian when it went down, is like buy stocks that you want to hold for a while. I'm not a big believer in day trading. Some people are, but I'm definitely a big believer in like you want to own a stock that like it's going to be fun to hold for like a decade as you watch the company execute, and it's going to make you a lot of money in the process. And that's what I get out of like owning a stock like Tesla. Like I'm excited to see them, develop autonomous cars one day. I'm excited to see them launch humanoid robots, have solar panels, have battery packs everywhere. Like, so I'm excited to watch that company progress, and that's like a fun time to be an investor.
I think that's great advice. And I think if I would tell my old self anything about whether it's crypto or whether it's stocks, it's like you can't time the market. As much as you think you know what's going
No.
on, you don't know. There's a reason that insider trading is illegal because all you have is the public information available. And so I'd say don't emotionally uninvest or invest your money. I say uninvest is like take your money out. But I mean, it's an interesting topic. And if you're just listening and you want to get started, I just think like sure, spending your money is nice. Sometimes treat yourself. We all do it, but it's so important to save. And so much of our generation is just trying to show off the next big thing. And I think like we're just diving in for how important it is to really save your money so that in 10 years, in 20 years, in 50 years, hopefully we all could retire in 10 years, but I just don't think that's going to
No, that's
happen.
boring. No one
Not
wants
saying that
to.
we want to. I'm just saying that we can. There's a difference.
Yeah. You want everyone like you. People want like the whole FIRE movement. Like I forget what it even stands for, but like financial freedom, retire early, or something like that. Financial independence, retire early. Yeah. I mean, the goal is to be able to have the freedom of finances and money to be able to spend your time how you want to spend it.
Yeah.
That's the goal to be striving for. But yeah, this has been fun to talk about like just like personal finances. It's helped me like rethink about like my personal finances. It's just a helpful discussion. Just make sure that you're like being intentional about your process and your income streams, your spending, your saving, and don't just like maybe just flow through it, which is maybe sometimes what I can do.
Yeah. And I think if you're somebody who needs to be organized or you're just like, yeah, I'm basically living paycheck to paycheck and I just like can't physically save money, then I say start backwards. Be like, all right, I am saving $10,000 and figure out how much it has to be in each paycheck that you get that you are putting aside in a different account that you can't touch. And hopefully eventually that grows and you could use that. And if you don't feel comfortable investing in the stock market right now, investing in startups, like really put it in treasury bills and get that 5% every year that you're not getting from your bank right now. And I just think that's important. And I don't think, as much as I think more people know about it, I truly don't think that many people know. At least I know a lot of my friends outside of my career don't know that even like they're just sitting on cash. I mean, I was sitting on a lot of cash the other day. I'm like, why am I not putting this into T-bills and getting the 5% interest rate in a year if I'm not going to touch it anyway?
The T-bills and S&P 500. Yeah.
Yeah.
But I recommend dollar cost averaging into the S&P 500 because it can go up and down, and it's kind of just been like this recently.
Yeah, which looks nice. But
yeah, it does look nice.
No, that doesn't say go invest it. But anyway, guys, thanks so much for listening today. I hope you learned something. Aiden, as always, thanks so much for coming on. I'm going to go have dinner, but this is super fun.
Super fun. We'll do it again soon.
All right.
Peace.
Oh.